Yes, good morning everyone. Today we are going to talk about the currency market, especially the USDINR market. So, today's market is very volatile, especially the broader indexes like Nifty and Bank Nifty. So, yesterday we generated a report on USDINR. Um, USDINR has been going up and down for the past 20 days due to the suspected RBI intervention in the market. So, apart from that, we believe that rising treasury yields in the US as well as rising commodity prices like crude will put a pressure on emerging market currencies. RBI has gotten some heavy foreign exchange reserves in its balance sheet. So I think they will also intervene sustainably in the market. But at the same time, inflation is higher in the broader market, as well as the price of all agri commodities, base metals, as well as energy markets are also going up, which will put a pressure on the consumers. It will also reflect as well as in the market. So I think overall the sentiment is something volatile. Even before the budget, we are speaking, right. So uh, on December 15th of 2021, we have seen that USDINR has depreciated close to 76.1718 something, and then RBI has been aggressively intervening in the market for the last 10 days of the year, from 21 December to 31st December. So, what is the reason for this main intervention? Is there is some conviction that a rising rupee will, rising dollar will have an impact on the imports of crude, as well as uh, 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 creating some panic among investors. So, the major reason why RBI has been intervening in the market is they just wanted to sustain the rupee level below certain threshold, even though the trade deficit has been widening by close to $13 billion in the November month data, as well as the consumption overall in the November December is very bearish as per the data compiled by our Ecoscope report from Motilal Oswal. Um, Apart from that, we believe that suspected RBI intervention in the month of December is due to the broad holiday session in the US. So I think that is the main reason why the rupee has appreciated from 76.2 to 74 to 73.89 something. So this is a vast appreciation. We believe that RBI has spent close to 15 to 16 billion dollars on intervening the uh, in the market to strengthen the rupee. So today I have seen in the futures market that for the January futures that rupee is trading around 74.495 against the dollar. So it is not very shocking news, because we believe that first of all the Federal Reserve is going to raise interest rates this year uh, for for three consecutive uh, 3 or 4 consecutive sessions. We have seen that rupee has been going up and up consistently. So the first reason is Federal Reserve interest rate rise. The second reason is commodity prices is going up. Crude has been going up 300 points and now trading at 6,319 rupees per barrel. So this is one of the reason why emerging market currencies are also put under pressure. Inflation is also high. So especially the wholesale price index has went up close to 13% for the month of December, I think. So these kind of data will also reflect in the market. I think overall the major crosses like euro or Japanese and other markets having some kind of volatility against the rupee for the for the past 20 days, but this would change in the coming months due to the higher inflation in the US. So the central bank of America is going to raise the interest rates very soon, which will have some effect on this currency market, because investors will pull money from the emerging market and then they will invest in their own market, safety assets like that. So these are the reasons why we believe that in the short term the market will be highly volatile, especially when crude is going up close to the 86, 87 barrel, uh, $87 per barrel. These are the major reasons. Apart from that, I think uh, the Indian bond yields also rising up. So they have to be very alert on this thing. The short-term yields are rising close to 6.4, 6.5 something. It is also astonishing to see that there is some massive sell-off in the market. So in the bond market, so the stock market is also reflecting. I think the FIs are also going up in bonds and as well as in stocks. So these are the concerns we have to be very careful. We believe that there will be some opportunity in the currency trading, so we will be updating soon in our next video. Thank you.